Are repurchase agreements part of shadow banking? Imagine a world where financial institutions lend and borrow without traditional banks being involved. That's the realm of shadow banking. Now, you might wonder, where do repurchase agreements fit into this picture? Let's find out. Repurchase agreements, often called repos, are short-term deals where one party sells securities like government bonds to another with a promise to buy them back later at a higher price. Think of it as a secured loan backed by collateral. These transactions usually last from overnight to a few days or weeks. In the shadow banking system, repos are a key tool. They help non-bank financial entities like hedge funds, money market funds, and special purpose vehicles get quick cash. This allows them to finance assets and keep the credit flowing without relying on traditional banks. Shadow banking involves activities like issuing asset-backed commercial paper, creating asset-backed securities, and using collateralized debt obligations. Repos fit right into this mix because they are secured funding mechanisms that transform short-term borrowing into longer-term credit. Unlike regular banks, these entities don't have access to central bank support or deposit insurance. They operate outside the usual rules, making their activities more flexible but also riskier. Repos help these non-bank players lend and borrow efficiently, creating liquidity in the financial system. Historically, before the financial crisis of 2007 to 2009, the shadow banking system grew rapidly. Repos played a big role in this growth, providing a large share of credit outside the traditional banking sector. This expansion helped finance many investments but also increased systemic risk. Today, repos are still vital in shadow banking. They enable hedge funds and other non-bank lenders to finance assets quickly and cheaply. But because these transactions are less regulated and relying heavily on collateral, they can amplify financial stress during downturns. So, to answer the question directly, repurchase agreements are indeed a major part of the shadow banking system. They serve as a crucial way for non-bank entities to perform bank-like functions, providing liquidity and credit outside the traditional banking framework. This has shaped financial history by expanding credit options but also by introducing new risks that can ripple through the entire financial system.